So under the balance sheet, first schedule we are going to see is schedule 5, share capital, if it is provided to you. Okay, so over here somewhere they have given you authorize the share capital of 2 lakh equity shares of rupees 10 each. Okay, so either what you can do is, I think we'll do it in the form of a table would be better, so that we can accordingly maintain the inner column, outer column and everything. Okay, so schedule 5. Okay, respective amount columns, and under this schedule 5 you have issued, normally we write it in this way, issued, subscribed and paid up capital. Authorized is not given to us. Okay, so how much is it? You have 2 lakh equity shares, mention what type of shares please, as it is given in the problem, of rupees 10 each. Okay, and the total is these amounts, I think they're all in lakhs, right? Somewhere it must be mentioned. Yeah, these amounts are actually all in lakhs. Okay, so you have, write it in the outer column, 2000. Fine. Okay, now again further let's see what has been provided. This is the final amount. Next one, so we have schedule 6 in the problem. Anything mentioned under schedule 6? We just take a look. Yes, there is the all the reserves and surpluses will go under schedule 6, and for now we have something called a profit and loss account balance that has been brought forward. Okay, other than that we also have contingency reserve and general reserve that go under schedule 6, which is reserves and surpluses. Okay, reserves and surpluses or surplus. Let's go one by one. Contingency reserve, take this, amount is 400, write it in the inner column, total can be taken outside later. Then general reserve also under reserves and surplus, amount is 1200. And the third one we have is the profit and loss account balance. This is after preparing revenue and P&L account, right? So whatever balance of the P&L has been carried forward, write it here in the reserves and surpluses, amount 300. Okay, I'll just highlight those amounts that we have already taken. So one by one as we do, I'll start highlighting them so that we don't have to again look into what we have already recorded and already or yet to be recorded. Okay, then 300 over here, and now you can total it up, write the total in the outer column. You get 1900. Okay, final total of your reserves and surpluses 1900. Is that fine? So in a similar manner, whatever amounts are given to us, we are going to record them under the respective schedules the way we have marked them. Okay, let's see, schedule 7. What is schedule 7? We said under schedule 7 will come all the borrowings. Anything the company has taken either from banks or the public will show under schedule 7, borrowings. Okay, so what do we have? We've already marked the other day in the previous class, public deposits, isn't it? We have public deposits. That means certain issues were made to the public in the form of this thing or instrument called the public deposit. So 1000. Also you have mortgage loans, am I right? Sorry, bank loans. The bank loans which have been taken from banks, those mortgage loans are what you have given, the loans that the bank, the company, the insurance company has given to people, and this is 2000. Done. So these are the two items that we have once again under borrowings, total 3000. Okay, so that was your schedule 7. Let's see schedule 8. What do we have under schedule 8? Schedule 8 is all the types of investments. Anything that your insurance company has invested elsewhere comes under schedule 8. Okay, and we have marked a couple of investments that we have here. Investments in government securities is one. Then you have 2400, the investments in government securities, and there's also shares and debentures of company called JSC. Okay, that is 1500, right? Just highlight these that we have already taken, 1500. So in case of investment, you also have something called an investment reserve given in the problem, and then another adjustment called the market value of the investment. So there is some adjustment related to this, and we will have to make the changes or something called a fair value change account, right? If you see over here in the balance sheet, there is fair value change account, which means any changes in the book value of the investment and the actual market value, right, that has to be taken into consideration. So we'll leave a couple of lines here and next move on to schedule number 9. Okay, and later on we will come back to this fair value transaction and we are going to discuss it. There will be a small working note related to that. Okay, so schedule 8 was investments. Schedule 9, let's see what is schedule 9, although we've already marked. They are loans that have been provided, loans which have been given by the company. Okay, so what kind of loans were given? First of all, mortgage loans, right, 1300. Mortgage loans, 13, and you have loans on company policies, isn't it? Loans on company policies, 700, also given away by the company, correct? So these two, done. So mortgage loans and loans on company policies, this gives you a total of how much? Outer column 2000. Total loans are 2000. Okay, so next you have schedule 10. Balance sheet problems are kind of fairly simple because you don't have a lot of adjustments and a lot of calculations that are to be done. You just have to go by the pro forma, go by the format and classify things properly under each one. So schedule 10 is fixed assets, correct? So fixed assets, again we have marked certain fixed assets, if I'm not wrong. Yes, we have premises here, right? Premises is 1500, highlighted as taken, 1500. No other items, I presume. Under schedule 10 we don't have anything else, so this 500 can be directly written in the outer column and highlighted as the final total. Okay, same way, next schedule, after fixed assets we have now current assets. Okay, we're going to do a separate category here, a separate total here as all the types of current assets. Fine. Now, in schedule in the current assets, schedule 11 belongs to, or schedule 11 is cash and bank balances. Although it's not properly given in this pro forma, understand that this current asset is to be highlighted, like, okay, this is a category, a different category. So cash and bank balance is schedule 11. Cash and bank balances. So how much would that be? Given here, cash in hand 3,600. Let's highlight this. It's taken. We don't have any other bank balance or anything given, right? Only cash. So if you just take a look, there is no other schedule 11 item here. So that amount of 3,600 goes directly in the outer column. Done? Then schedule 12, let's see what is schedule 12. Advances and other assets. Any money given in advance or any balances that are left or deposits that have been made, all other assets are going to come in this schedule 12. Okay. So schedule 12, we've already marked some things. Once again, we have outstanding premiums. Let's take this 240, right, or everything in the inner column first. Then deposit with electricity board, amount is 100, and finally agents balances. So since it's a debit balance, I told you it will go in the asset side. If it was a credit balance, it would become current liabilities. Okay. So here amount is 110. The total of this, the schedule 12 that you have is 450. Okay. So schedule 12, advances and other assets. Done. So that was at least up to schedule 12, that is your current